some fellow shareholders here and friends and director. If anyone would like a copy of this presentation, please put your hand up and Vix will walk round and hand you a copy if you want to go through it. We also have copies on our stand. And a copy of this presentation will be on our website. This photo here, just to show you, is the site being cleared where the processing plant is going to go. Our base case is for 100,000 ounces of gold per annum, as you can see on the top left. The project is fully permitted. It's fully permitted to construct and operate a mine. Here's our statutory disclaimer. We're looking at a two-staged approach to construction and production. Stage one is 100,000 ounces of gold per annum. The upfront capital cost for that is expected to be $125 million. We're fast-tracking that because we purchased the main mill. That'll have a 2,600 ton a day capacity. It's been delivered to Nicaragua. We spent about $4.3 million buying the land, and on the mill we spent about $6.5 million. 3 of that was in shares issued at 50 pence compared to the share price of 30 pence today. For the second production scenario, our expansion will take that to 150,000 ounces of gold per annum by adding underground ounces in. We believe there's also another additional 5 million ounces of gold on the concession package, where we have 580 square kilometers. We've got a 12-month payback on our economics, and we have all-in sustaining cash costs of $900 an ounce. Our valuation at $20 an ounce in the ground, price-to-book ratio of 0.14. We have an NPV on our PEA in October last year of $418 million. Nicaragua. The country is incredibly mining friendly, so from an operational perspective, I think we're in the right jurisdiction. Gold's the biggest export. There are 4 producing mines in the company that are operating. The mining law hasn't changed, so I've been going there for the last 15 years. Here's a photo of myself meeting the president of the country, President Ortega. This was taken 9 days ago. I just arrived in via Miami yesterday. He's very supportive of the mine, and as you can see on the table in front of us, there's a map of the concession of Nicaragua that we have at Landia project, and it was a fantastic meeting. So we have full support from the head of state, and that trickles down through the ministries and the departments and so forth. This is another photo taken at the same meeting 9 days ago, and on the left we have the Minister of Energy and Mines. So we have are we at the right address that wants to see a mine at this project? Here we are. And so there's nothing to stop there being a mine at this Landia project, Nicaragua. This is the big concession package. Just in the interest of time, I'll say that we think we've got at least an additional 5 million ounces of gold and possibly some copper as well. Here is Landia project. We have 2.3 million ounces of gold. It's over 7 different deposits. And the core deposits make up about 2.1 million. All these areas can be expanded. This is the permitted area. There are 3 permitted pits comprising 1.1 million ounces of gold. And everything is permitted, including the mine site infrastructure. So the processing plant is permitted, the tailing storage facility is permitted, the explosive magazine, the waste dumps, everything is permitted to construct and operate the mine. And there's 1 million ounces underneath the pits that are not yet permitted, but will get permitted. We're doing a bankable feasibility study. This should be out in the next 2 weeks. The bankable feasibility study is plus or minus 15% capex and plus or minus 15% opex on the project. All technical studies are completed. We spent $7 million on this last year, and I was looking through the provisional mine schedules yesterday, so we're very close to finalizing this study. This is the plant layout, so this is 50% engineered, and on this you can see, and everything within that is now pinned down to the nearest 1 or 2 meters, where the explosive magazine is, where the offices are, where the power is, where the primary crushing, secondary crushing and reagents are. Here is the mill. We've purchased this mill, as I mentioned. That's 90% arrived into the country, into Nicaragua. This is a cross-section of the main pit. We have 80,000 meters of drilling on the project. And it's just very, very high grade. And you can see by the top intercepts there of 10 meters at over an ounce of gold. We're looking to high grade this to give a quick payback. And the summary here effectively gives you about 225,000 ounces of gold. The line in bold there, 1.6 million tons at 4.6 grams for 225,000 ounces recovered gold, just demonstrates the high grade nature of the project and quick payback. This was a PEA that we filed in October, so this is a 400-page report. It's filed on CEDAR in Canada. And just to run through the highlights, this shows you what we would like to be, and it includes the underground, which we haven't permitted and we haven't drilled out to a tight enough efficiency. But if we did do this, it shows 150,000 ounces of gold per annum for 9 years. There's a 12-month payback. There's a net present value after capex, after upfront capex of 400 million, an IRR of 54% based at on 1,700 gold. These are very, very attractive economics, and you can see the last two bullet points here are the fully diluted mill feed. Resource expansion. One of the values within the project is we think there's at least an additional 5 million ounces of gold. So what have we done about that? We've flown it with helicopter geophysics, we've done soil geochemistry, we've done structural geological models, we put lots of geologists on the ground to map it. We have 118 kilometers of veining on the project. And just by drilling down the ore chutes of the existing core areas, we can get up to 3 million ounces. And we have all that in 3D geological models. And this is an example. This is called a long section of the pit. And underneath the pit here, you can see 4 drill holes underneath the pit, each at 10 grams per ton, which is a third of an ounce. And that goes down another 200 meters. At the moment, it could go down another 200 meters, but we've got to drill it. So great potential to expand the mineral resource. The blue area there are the 3 permitted pits, and then over to the right, you've got Cacao. And you'll notice there's a line there saying a fault, named the Highway Fault. The geologists believe that the system drops down by 150 meters to the south of that highway fault, to the south of that road. And you have a fully preserved epithermal vein system to the south of the road. Cacao is a quartz vein. There's a quartz plug that pops through the host rock called andesite. We drilled the top of it. There's 400 meters that we drilled originally for 60,000 ounces of gold. But we now think that goes for 10 times the length for 4,000 meters. And here's a bird's eye view or a plan view. Over on the left, you have 60,000 ounces of resource, and you've got a 4,000 meter strike length. The yellow is colluvium, so the vein is hidden underneath some colluvium alluvium, and we drilled underneath that last year. And here's an example of the drilling. We put in 3,500 meters. It's a great success geologically. As we got down, we got wider zones of mineralization, and we got higher grades. So on the left, you have a hole there of about 15 meters at 4 grams per ton. And the blue contour is the vein, everything greater than 10 meters thick. That's a nice, thick area of mineralization. And we think we're just clipping the top of a system. So we believe this is fully preserved, and there's another 1 million ounces of gold at Cacao, which is within 4 kilometers of the permitted processing plant. But we've got to go and drill this out. Just to touch on the environmental and social, we put in a water purification plant for $250,000 last year. We opened that in May. We're delivering to 452 households. We have a social team of 14 people doing lots of things with different elements of the community. But we take this terribly seriously. We're also training about 120 people at the moment to be the future workforce for the mine. So we're doing huge amounts with the local community, and on the environmental side. So as a quick summary of the shareholder structure, Jim Mellon's a director of the company, and Jim Mellon and myself have about 22% of the company. The other directors own shares and have been very, very supportive. So to summarize the investment case, we have a base case of 100,000 ounces of gold per annum production. That's fully permitted to construct and extract that ore. We've got an upside case to take it to 150,000 ounces by adding the underground in. That scenario has a 9-year life. We think there's district scale here of 5 million, maybe 10 million ounces of gold. We've got attractive economics with 900 all-in sustaining cash costs on the open pit portion of the PEA we did last year. And we're pretty undervalued. If we take out the cost of the land and the cost of the mill, there's over $10 million of saving there. We're about 1% of the gold price right now. So you buy gold at $1,940 an ounce, or you buy a share of Condor at $20 an ounce in the ground. So thank you. That concludes my talk.
Have you got a time when production might begin? Any idea?
Yes. Well, first of all, first step is to get the bankable feasibility study out, which is out in a couple of weeks. Then we have to arrange the finance for the project, which we've discussed, and that should be this year. We'd hope to start construction later this year. The construction period's about 18 months. So I would hope that we're pouring gold within 24 months as a maximum. The only short route to production is for us to go into toll milling. We have been in negotiations with a nearby mill. Nothing has come to fruition of that. I can't report to shareholders anything. There's a mill nearby with spare capacity. We would like to take our ore over and treat it through that mill, but the other party don't want to do anything about that at this point in time.
Any more questions, please? Okay, well, on that note, I'd like to thank our speaker. It's been a very interesting presentation.